Bitcoin's up about 80% year to date. So it's very significant movement. Why is that happening? So I think there are a few things that happened that contributed to this. The first thing is, in light of everything that happened with Silicon Valley, people became very scared of stable coins, right? A lot of institutions and individuals were holding stable coins like USDC and USDT, and they got a little bit spooked finding out that Circle had a ton of their money at Silicon Valley Bank. And so what did they do? They sold their stable coins and they bought Bitcoin and Ethereum.
We're talking crypto investments, outlook for the markets, and for Bitcoin with Josh Frank. He is the co-founder and CEO of The Tide. Josh, welcome to my show.
Thanks for having me on.
Josh, you and I both went to the same school, McGill. So I'm very happy to talk to a fellow McGill alum about the markets. You've had a pretty successful career after graduating, so congratulations. We're going to talk about The Tide and what you do. But first, I want to talk about some recent news coming out of the crypto markets. Tell us about the Shanghai upgrade. What does this mean for not just Ethereum, but the broader crypto markets?
Sure. So the Shanghai upgrade for Ethereum is a really big deal. It marks the official movement of Ethereum from proof of work into proof of stake. And so now with the Shanghai upgrade, we already had the merge, but with the Shanghai upgrade, what that means is anybody that was already staking their Ethereum now has the ability to unstake their Ethereum. So for anybody who doesn't know what staking is, basically what you're doing is you're helping to secure the network. And in return for that, you receive a reward, which you can kind of think like it's inflation, right? They're increasing the number of Ethereum, and that's paid to you as a reward for staking your Ethereum. So leading up to the fork, we had about $36 billion worth of Ethereum that were staked, but that those assets could not be unstaked. They couldn't be removed from Ethereum. And so coming into the Shanghai upgrade, right, everyone started to kind of get very nervous. Well, once this upgrade actually happens, and it happened yesterday, what is going to happen to Ethereum's price? Is it actually going to crater with these $36 billion of assets going onto the market? And so, happy to kind of get into that a little bit more and explain, what does that mean, right? Is Ethereum going to crash? How fast is it going to take for these $36 billion worth of assets to come into market? So, we'll start there, but happy to kind of go into some more detail if you want.
Yeah, let's start there. But I want to ask you about the price as well, because you mentioned the price. I didn't see a huge price increase. I mean, we're speaking today on Thursday, and ETH is up 6% on the day. Broadly,
well, a lot of people
Bitcoin
thought there was going to be a price decrease. Right? Because now you have $36 billion in assets presumably hitting the market, but that's not the case. And I'll explain.
So why do you think that the price defied market expectations?
Yeah, so I think that there are a lot of people that got worried at these headline numbers of $36 billion worth of ETH being unstaked. But the thing that you have to remember or understand is how the Ethereum unstaking mechanism actually works. So in order to stake Ethereum, you need to provide 32 Ethereum per validator, right, to validate the network. And so basically what happened was there were 565,000 validators that existed with 32 Ethereum each. But the way that the unstaking works, it's actually split into two. There's what's called partial unstaking and full unstaking. So right now, the average validator is sitting at 34 Ethereum. Remember, you only need 2 to stake. So you're looking at an extra 2 Ethereum times 565,000 times the price of each was about 2,000. So you're talking $2 billion that are above the amount of Ethereum that you're supposed to have to actually stake. So the process is over a 5-day period, starting yesterday, those $2 billion in assets that were above the 32 that you needed to stake are being returned to all of the Ethereum holders. So we're seeing about $2 billion in potential assets over the next 5 days that can hit the market. For reference, we're seeing, we see on average about $2 billion, maybe $1.5 billion in trading volume on Binance. So from a relative perspective, it's not that much. But the concern isn't the partial unstaking. The concern has been the full unstaking, which is when people can actually withdraw the full 32 ETH times out 565,000. That's over $30 billion that could potentially hit the market, right? It's a massive amount of money. But the way that the unstaking actually works is it doesn't happen in one day. It happens over time. So in order to secure the network, the Ethereum has put rules in place that basically say, depending on the number of validators, you can only unstake a certain amount of Ethereum per block or per epoch per day, basically. And so what we're going to see is about 3% of that staked ETH hit the market. So figure about $110 million per day over the first 11 days after the partial withdrawals are done. and going down to about, for the next 500 days, potentially about $50 million plus a day that are then going to hit the market. The thing to remember, though, is the fact that just like people can withdraw ETH, they can also deposit more Ethereum, right? So even though we might see these billions and billions, tens of billions of dollars, which is a massive amount of money, it's 15% of Ethereum potentially hitting the market. The thing to remember is that people can now deposit Ethereum as well. So whereas before, when you were depositing Ethereum, it was an unknown of when you'd be able to withdraw it. Now anyone depositing knows that at some point they're going to be able to get that Ethereum out because now unstaking is possible. And so right now we've seen about 15% of Ethereum assets being staked with the network. But if we compare that to other assets, for example, Cardano and Solana, they're staking about 70%. Avalanche and Cosmos, that's about 65%. So ETH is only 15%. And the reason that it's so small is likely because people couldn't unstake. But now you can stake your ETH, earn about 4.5% yield, and you'll be able to unstake that if you want to unstake it. So in kind of the first day, since unstaking has been possible, we've seen basically net of new deposits about 60,000 Ethereum being unstaked, which is relatively inconsequential. So I think at least today it was very much like a nervousness around the rumor. But once the news actually hit, the market hasn't sold off. But the question is, well, what happens over the next 500 days? Do we continue to see a lot of Ethereum hit the market, or do people start depositing more? And there's more nuance there, but that's the very high level overview.
Just on the staking aspect, I've heard one argument against staking. Well, not so much against staking, but just as to why people aren't staking as much as probably one might expect, and that's because we have higher interest rates than before. And so when you're staking for 4.5%, 5% yield, you're directly competing with money market funds that are offering the same, if not higher, if you're going into the more high yield category. And so why bother staking yourself when you can just get fixed income right now at higher interest rates, right? I think, does that offer sort of competition for Ethereum staking?
I don't think so. I don't think they're mutually exclusive. The way to think about it, right, is like if you had Apple stock and you just wanted to earn some additional yield on it, right? That's all Ethereum staking is, right? I don't think that people are necessarily going to be buying Ethereum just because they can earn 4.5%. They're not earning 4.5% in US dollars. They're earning 4.5% in Ethereum, right? So the way to think about it is if you're already an Ethereum holder, right, why not earn some additional yield on your asset is kind of the way to think of it. So I don't think it's going to compete at all with traditional like treasury yields, but it's just, hey, why not earn some additional yield on your Ethereum? And you can do that on Coinbase or any of the other exchanges that you have accounts on, right? If you're holding the asset, if you're planning on holding it long term, you might as well earn some additional yield.
Going back before the Shanghai upgrade, you'll recall that last fall we had the ETH merge 2.0, ETH merge leading to ETH 2.0, and it wasn't immediately deflationary, but it's become deflationary over the last month or a couple of months. And so now the argument is that ETH being a deflationary asset, the long-term fundamentals are in its favor. Does this argument mean anything to you?
Yeah, I mean, I think ETH has been deflationary. So far, there have been a couple of days where it is inflationary, but it's been net deflationary. I think that's a fair asset. I mean, I think you have to think about, well, what is the fundamentals? Why would I want to hold ETH? What can I do with it, right? So I think one of the things that gets lost in the conversation, I think you'll appreciate this, especially covering macro and traditional equities, is what are the actual fundamentals? Does it accrue any value to me as a holder of this asset? Why would I want to hold the asset, right? And so with Ethereum, you can use ETH to participate in the network, to pay gas fees, to do things on the network. So as there's demand for more things, for example, DeFi or NFTs or other things that exist on Ethereum, or maybe stablecoin transactions, right? You're going to need Ethereum to pay to interact on that network, right? Which is one of kind of the views as to why Ethereum should accrue value over time. But there's also in crypto, there is a sentiment aspect of it as well, right? It's very difficult to deny that a huge part of the way that value accrues to these digital assets is based off of sentiment, right? It's this belief among the crowd that they want to hold these assets, but that's not different from what's happened in equity markets around a lot of the GameStop and AMC and other types of manias. So I think Ethereum does have value in that you can earn rewards staking it. You can use it to participate in the network. And there are millions and millions and millions of wallets that are active on the Ethereum blockchain. It's got among everything in crypto, the highest usage.
And now, just broadly speaking, the crypto markets, this bull rally, let's back up away from Ethereum for just a minute. This bull rally that we see in cryptos, how much of that was due to the fundamentals that I know the crypto market is very broad, I'm generalizing, but how much of it is due to improved fundamentals in, let's say, Bitcoin and the altcoin markets versus just a general bullishness in risk assets? We've seen the NASDAQ had its best quarter in Q1 since 2020, for example. So how much of this is correlation with other risk assets versus improved fundamentals in the crypto space?
It's really funny you ask that because sometimes I go on these types of shows and people ask me, well, is Bitcoin behaving risk off? Is it more correlated to gold? Is it behaving risk on? Is it more correlated to the NASDAQ? It just depends. If you're looking at a 30-day, 60-day, or 90-day correlation, it depends. But Bitcoin over the last 60 and 90 days has been most correlated to the NASDAQ. It certainly has been performing as a risk on asset. I think the question is, why is crypto moving, right? So we're sitting now, Bitcoin's over $30,000 when we're talking. Ethereum is around $2,000, right? So we've seen a lot of movement. I think, Bitcoin's up about 80% year to date. So it's very significant movement. Why is that happening? So I think there are a few things that happened that contributed to this. The first thing is, in light of everything that happened with Silicon Valley, people became very scared of stable coins, right? A lot of institutions and individuals were holding stable coins like USDC and USDT, and they got a little bit spooked finding out that Circle had a ton of their money at Silicon Valley Bank. And so what did? They sold their stable coins and they bought Bitcoin and Ethereum. The second thing is, at least around Bitcoin, we've seen this narrative emerge as Bitcoin as a hedge against banks, right? If you look at, Satoshi in the original Genesis block of Bitcoin, right? He mentioned banks on the brink of bailout, right? That was the quote that he used from the Times of London in 2008, right? And so there's kind of always been this ethos underlying crypto as being a hedge against the banks, as being the hedge against this financial system, which is, feels rigged to some or disclusionary and things like that. So I think that's the second thing. But keep in mind that narratives in crypto often are very, very short-lived. Like in 2020, 2021, we had this Bitcoin as a hedge against macro uncertainty and risk off narrative, right? And now we're talking about is Bitcoin risk on? Well, 2 years ago, the whole narrative that moved the market was this risk off narrative. I think the other things to note is we've actually seen a lot of pro-crypto regulation take place in Asia. So one thing to mention specifically is the Hong Kong government has adopted a much more pro-crypto stance recently. We will see how long that lasts, but they have given licenses to crypto companies. In Europe, we're seeing some new regulation take shape called MiCA, which is actually like one of the biggest things that we struggle with as an industry in crypto is having regulatory clarity. We certainly don't have that in the United States, but now in Europe that's being introduced. And there's other things as well. I mean, I think another example is even there are a lot of VC funds in crypto that raised a tremendous amount of money to deploy into tokens into companies. But right now, there just aren't that many good companies in crypto. Like there are very few companies that actually make money in the space. And so a lot of venture funds have actually taken the money while they're waiting to deploy it and deployed it into Bitcoin and Ethereum. So that's kind of, a few of the different reasons that it's moved. And I would add a final layer to it, which is that right now we're in a very low volume environment. There's not a lot of liquidity in the market, which means that it doesn't take as much buying activity to move the market up. But on the other hand, it also means that doesn't take as much buying activity to move the market down as well.
Yeah, it's interesting you mentioned cryptos being a hedge against bank failures because ironically, Silvergate and Signature Bank were directly tied to cryptocurrencies. And yet the strength continued to prevail. I'm hearing this rhetoric of Bitcoin dominance being in the headlines. Is that something you've looked into?
Yeah. So Bitcoin dominance means basically what is the overall percentage of market cap of crypto that Bitcoin accounts for. And so we saw for a couple of months that Bitcoin dominant. So the way that I like to think about crypto markets is basically when no one's talking about crypto, and this is not investment advice and nothing I say, but when no one's talking about crypto, buy Bitcoin. When everyone starts talking about Bitcoin, buy shitcoins. When your grandma asks you about crypto, run. And so basically what happened was after the FTX collapse, things quiet down. No one was talking about crypto. What happens? Bitcoin's the first asset that kind of starts moving. It kind of always happens, right? Then what happens after Bitcoin moves? Everyone's like, Bitcoin's too expensive. Let me dump into all the other things, right? And now those things are moving. And so what happened was during the last bull market, Bitcoin dominance went down as the alternative currencies, the altcoins started to move up. But then FTX collapsed. Everyone ran away from all the altcoins. They got super scared of them, and they went to what they view as the more safe haven asset, which is funny to talk about, but Bitcoin is viewed in crypto as a safe haven asset, which obviously there's a tremendous amount of volatility to consider a safe haven asset. But everybody moved into Bitcoin, and now and now there's movement out of Bitcoin. And what's really interesting to note in that regard is that movement is actually in large part due to South Korean retail traders, which is something that people aren't talking about. So an example of that, Dogecoin, Elon changed the logo of Twitter to Dogecoin for a couple of days and, everything. There was movement in US markets, right? The Doge surged 30%, but it started to drop. But then when Asian hours trading started to open up, we saw this kind of sustained movement of Dogecoin. It stayed up. And if we look at what are the altcoins that have been out, and what we saw was more volume in Korea than in any other market. And what we've seen that the last few days, Solana is one of the assets that outperformed Stacks. And by outperformed, I mean outperformed Bitcoin. A huge amount of the volume in the case of Solana, at one point yesterday, there was actually triple as much volume in Korea than there was on Binance. So lots of volume coming from the Korean retail market, which is very interesting. Gambling. It's gambling is the only explanation.
Speaking of gambling, this has nothing to do with anything, but did you see FTT token went up 80% over the last 2 days?
Yeah, so
I don't know. Yeah, go.
The FTT creditors announced that they had found or they recovered, I think it was about $7 billion worth of assets. And they announced that they were considering relaunching the exchange.
Yeah,
I don't think regulators are going to be all that happy with that. I can't imagine that actually occurs. But yeah, I mean, look, people like to gamble.
There seems to be this
right?
revival of dead or companies that have died. I spoke to a person on the board of directors for Celsius, and he said that they are in the works of reorganizing or restructuring Celsius. They're going to make Celsius 2.0 by this summer. They're going to rebrand it into something completely different. It's not going to be called Celsius. Perhaps they'll do the same with FTX.
I sincerely hope not. There are a lot of people that were very negatively impacted by that event that deserve to get their money back and out. And it was fraud, and Celsius was also fraud. So hopefully that's not the case. And I think at least U.S. regulators have taken they've taken a no nonsense approach would be the understatement of the century. They've become incredibly aggressive, especially Gensler and the SEC against crypto. I don't think they're going to let any of this slide. I have to imagine that U.S. regulators will be all over this.
I just want to touch on regulation very quickly. You mentioned pro-crypto regulations across or abroad, in Hong Kong in particular. It doesn't seem that we have that here in the U.S., or at least not from my observations. Coinbase just got a Wells notice. You see what happened with Binance and CFTC. Celebrities getting sued all at the same time. You've seen the headlines, Josh. What can you help us make sense of what's going on and what the regulators are perhaps thinking right now in the U.S.?
Yeah, so I think it's important to clarify that regulators isn't a broad entity, right? Regulators are a number of individuals that, while we think they might be operating in the same way, are often individuals operating on their own. In the case of the SEC, there are 5 people. 3 of them don't like crypto. 2 of them like crypto. And so when you have 3 versus 2, it doesn't matter what the other 2 people think, the majority wins, right? And so the SEC, and in particular Gensler, has been vehemently anti-crypto and has taken an incredibly anti-crypto stance, basically going after anything however he can, and taking a regulation by enforcement approach. So instead of actually crafting regulation that provides the market with clarity, that lets people know how they can operate within the US, he's instead gone after, and in other lawsuits, for example, just snuck in that these assets are securities, as opposed to actually, providing clarity on, well, what makes a digital asset a security or not. And so what's happening is now a large number of crypto firms are taking the SEC to court and saying, wait a minute, this is not right. And so an example of that is Ripple was sued by the SEC. That actually preceded Gensler. That was in the Clayton administration. Ripple was sued by the SEC for selling an unregistered security. That is in court right now. There is a belief in the market that that case will settle soon or will come to a conclusion soon. And the market has certainly been pricing in Ripple winning that case. And so, what we kind of have to see is, U.S. regulators, and I'm speaking specifically about the SEC, but I can speak about other regulatory bodies within the U.S. as well. Congress, I think, has also taken an anti-crypto approach, but there are people in Congress that are pro-crypto that we can talk about as well. The NYAG has taken an anti-crypto approach, but what's happening is now crypto companies are in court against the SEC. There are a number of lawsuits, and I think we have to kind of wait and see what happens to kind of see, what's going to happen to the market. Because if Ripple beats the SEC, so there's three outcomes: they settle, they win, or they lose. If they win, it is going to be the Wild West, because that basically is going to say the SEC lost its case that Ripple is a security. If they settle, the SEC isn't admitting defeat. It's not saying that they lost their case. That might have less of an impact in the market. And so I think if Gensler was smart, he'd probably settle, but I think he's got ego, so I don't think he's going to. And then there's Ripple loses, but the market is certainly not pricing in a Ripple loss at this point.
I think the point what you're trying to make is that it's divided, right? We don't have unanimous support or for cryptos, and we certainly don't have everybody hating cryptos at the same time. I wonder if it's an issue of either education or just difference in politics, or from what I understand, the technology speaks for itself. And people are not denying the advantages of blockchain technology. I've heard some people say that the government is just putting on an anti-crypto stance to make way for CBDCs. I don't know how much of that theory has merit. I'll let you comment on it.
Yeah, so I think there's a lot to unpack in that statement. Look, politicians, you have to be a certain type of person to be a politician, right? And sometimes politicians' goals are not to are not in the best interest of the people in which they represent. Certain politicians are also not elected officials, they are appointed officials. And so it really depends. But I think, I don't think that there's like this. I think there's this kind of belief among a lot of people that like everyone in the US government is colluding and they're all working together. Like, have you ever walked into a DMV? Do you really think the government is like that? They're that organized that they could do that, right? What has the government ever done that's that organized? So, go for it. Go for it.
No, I was just gonna say, I'm based in Canada, so I've never been to a DMV. It's one of those things lucky. I have to experience. I hear about it, but yes.
Yeah, it's fantastic. But the point being, right, is it's not. I don't think there is this mass conspiracy theory going on behind the scenes. I think a lot of this is coming from the SEC, and Gensler has very closely aligned himself with Elizabeth Warren, who is obviously not the most pro finance and innovation and other things. And I think that it is political for Gensler. I think Gensler wants to be Treasury Secretary, and I think that he wants to make crypto basically, the victory on his resume, saying, hey, because he's kicking crypto when it's down, right? This is post Luna, this is post FTX, this is post all of the nonsense that's happened in the market. And we deserve regulation. Don't get me wrong. We deserve a lot of regulation. We need clarity. But I think he's definitely like trying to kick the industry into the ground and then stand on the grave of it as he goes and vies to be Treasury Secretary or Senator or whatever he's else is in his political ambitions next.
Let's come back to regulation at another time. That's an excellent point you brought up, and we can unpack a lot more there. But I want to just finish off on, I want to talk about the TAI, but also I want to talk about new applications of, I'm going to put everything together: Bitcoin, cryptos, DeFi, things that are new or are emerging that may excite you and may prompt more adoption into the space. What could those things be?
Yeah, so look, I think it's a really difficult question because everyone asks, what is the killer use case of crypto? And that's a super fair question because I don't think there is a killer use case except for one thing so far, which is stablecoins. So one of the biggest problems that exists, or a problem that exists in the world, is cross-border remittances. So if you are a foreign worker, for example, that goes and works in a different country, as an example, there are a lot of Filipino foreign workers that work in Hong Kong as maids. Right now, if you go to a Western Union or you go to any of these other remittance services, they're going to charge you 5, 6, 7% to send your money across the border, and it's going to take days. With stable coins, what you can do is you can now send money, a US dollar denominated amount of money, across the border instantaneously for cents, right? And that helps millions and millions of people around the globe. But what it also gives millions of people access to is the US dollar. And I'm sure on your show you talked about inflation, in the US and how terrible that is. But if you look at countries like Pakistan, where the inflation rate is 30% per year, or you look at other countries in like Venezuela, where the inflation rate is thousands of percent. Yeah, we have it easy, right? And so it is very difficult in those countries for people to access US dollars, right? And so now we have a way for them to access a more stable asset, not the cryptocurrency itself, right? I mean, it is a cryptocurrency, but not Ethereum or Bitcoin, but like a stable coin that happens to be issued on the Ethereum network, which then now they have a hedge against their own country's inflation, right? They have the ability to remit and send money across borders instantaneously. And we're starting to see that adoption around the world. So I think that is the killer use case that we have today. A lot of the other killer use cases are much more speculative. Like if we talk about DeFi, for example, I think people fail to realize how big DeFi actually is. So DeFi right now, I'm just pulling it up. It's $49 billion. That's it. The entirety of the DeFi market cap is only $49 billion. I mean, it's peanuts in the grand scheme of the world. There are plenty of private companies, there's publicly traded companies that you guys have never even heard of that are bigger than $49 billion, right? And so, I think DeFi is still in its infancy, but within DeFi, there's kind of this move, which, people are advertising as being new. I don't think it's necessarily new, which is real world assets, which basically means let's take traditional treasuries and bring them on chain, right? Let's take traditional assets and bring them on chain and tokenize them, which confers a large number of different benefits. Like, for example, imagine you could buy treasuries, you could take them on chain, you could use them as collateral, you could take a loan against that, right? There's a lot of really interesting things that you could do, and you can kind of operate as your own bank, which is kind of this promise of DeFi. The challenge being that these protocols get hacked all of the time, and there's a lot of risk, and it's not necessarily the best UX. But there's a number of other things which I'm happy to get into as well. But those are just a couple that come to mind, initially.
You're very knowledgeable. We can speak all day. We'll save that for next time. It is an interesting point how you mentioned the DeFi market is relatively small market cap. Well, the same could be applied for all of cryptos. At its peak, it was only, I think, $3 trillion for all of cryptos.
We're at 1.26 right now.
Yeah, it's been a big decline since the peak. But yes, you're right. The point I'm trying to make is it's had a disproportional amount of media and social media attention, despite its relatively small size compared to equities. And the fixed income market is the biggest market in the world if you discount real estate. I don't see influencers talking about fixed income and high grade yield, right? I don't like. It's an interesting phenomenon is what I'm talking about. You yourself are very, very knowledgeable about cryptocurrencies. I'm just curious, tell us how you became involved in this space, because we both went to McGill. I know the program very well. I know exactly what you studied, and it wasn't blockchain. So you had to do a lot of self-education. What was that process like? How did you teach yourself, blockchain technology and become knowledgeable in cryptos, and transition into working for, basically yourself now?
Yeah, so I graduated college, and to your point, I was looking at the crypto market a little bit in college, but certainly didn't have a degree in crypto. Took my first job actually out of college working in post-trade settlement technology in 2017. Post-trade settlement technology, if you believe it, is significantly more boring than it sounds, and I'm sure it sounds very boring to you. And so basically, this was at a time where Bitcoin very quickly was running up from $2,000 to $3,000 to $4,000. John McAfee and others were posting on Twitter about, all these different tokens, and they were going up like 200% within an hour. And I was like, what the hell is going on, and how do I make money? Right. And so I started day trading. I started day trading crypto. Realized there was a really big information gap in the market, right? I could log on to fidelity.com, Charles Schwab, all these different apps. And even as a retail trader, I could get information about all these securities. I could get their earnings. I could get estimates. I could get news. I could get sentiment data. I looked at the crypto market and there was nothing. It was completely unclear as to what was going on in the market. And that was kind of my impetus for starting the company, and happy to get into what we do as well, if it's helpful.
Tell us a little bit about the TIE and what it is that you do right now.
Yeah, so at a very high level, we solve one major problem for institutions. So when I mean institutions, I mean asset managers, banks, hedge funds, OTC desks, market makers, and other liquidity providers, as well as other institutional market participants, which is, if you ask these folks, how are you staying on top of crypto from an information perspective? What they'll do is they'll load their browser, and I kid you not, there's 40 different tabs open on their browser. There's all these different windows, and they're jumping around trying to stay on top of the market. And so what we do is we really consolidate the entire market into a single screen. So all the different data sets that an institution we need to look at, from market or pricing data to data on derivatives markets, to news, to sentiment data, to governance data, which you can think of kind of like proxy voting, you name it, like to blockchain data. We aggregate that all on a single screen. And today we service about 150 of the largest institutional clients in the world. So we work with both a lot of big publicly traded banks and some of the largest asset managers that as well as a lot of the crypto native hedge funds, the firms that are native to crypto. But what we really try to do more so than anyone in the market is bridge the gap between traditional finance and crypto. We know that it's really hard and difficult to make sense and understand this market, especially as somebody with a traditional institutional background that looks at like all of these terms like Chapella upgrade in Shanghai and blah, 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 all these made up terms that we throw out. And so what we try to do is really take the entire market, synthesize it, and put it in terms where, a very sophisticated but a traditional investor could understand and can make sense of.
Where did that name Shanghai upgrade come from anyway? I haven't looked into that. Do you know? Nobody knows?
I couldn't tell you.
Okay.
I'm sure somebody knows.
So the person who made it up knows.
Yeah.
Final question. I've always wanted to ask this to a McGill grad, but now I can do it professionally, I guess. If you had to go back in time to your first year, freshman year, and you could do everything all over again, would you do the same thing? Would you go to the same program? Would you go to the same school? What do you think?
Yeah, I made a ton of mistakes in my first year. My first semester was not great.
As all of us did, yes.
I had a lot of fun and didn't do a lot of school. I loved it. McGill was awesome. For anybody here who's listening, who's looking at colleges, or for anybody who's a kid that's looking to go to colleges, I mean, I can speak. I had an amazing time. It's a great school. It's a great university. It's a multicultural city, and it's a lot of fun. So I don't know. I mean, I'm curious as to your perspective there, but I wouldn't redo anything.
Okay, very good. You wouldn't, knowing that you're working in this space now, you wouldn't major in math or computer science or anything like that?
No, look, I think if you have a will, there's a way with anything in life, right? And with the internet these days, you can kind of teach yourself anything. I don't have a degree in finance. I studied strategic management, but I've been building this company for 6 years, and I've talked to thousands of hedge funds and asset managers and all these different institutions. And look, over time, you pick this up. I mean, I think about it often. Like if I looked back at myself 6 years ago and I had a conversation with myself when I started this company, I would have been like so embarrassed, like unbelievably embarrassed. But I think one of the things that crypto offers is this kind of openness and this willingness to teach and this belief that like to your point, like if you look at the pie of total global assets, we're tiny, we're fractional, right? We need more people to come in the space for it to grow. And I think you'll find that there are a lot of people that are here to help and that want to help, because if this is it, if this is the pie we're competing for, right, what are we doing, right? And so I think we all need the space to grow.
Absolutely. Well, I appreciate the work that you're doing and the message that you're giving to the audience today. Where can people find out more about the TIE, your work, and learn about you? Yeah,
so if you're an institution and you're interested in taking a look at our services, you can go to our website, thetie.io, THETIE.io. However, we provide free research commentary to everyone, so not just institutions. So if you follow us on Twitter at thetie.io, at THETIEIO, you can access a lot of that, and you can follow me, even though I don't have that much to say on Twitter, at I think it's Joshua_Frank_.
Well, thank you for your time today. We'll put those links in the description down below so people can check out those links that Josh just mentioned. Thank you for your time, and we'll speak to you again soon.
Thanks for having me on.
And thank you for watching. Don't forget to subscribe.